Want to build wealth without taking big risks. The secret isn't gambling on the stock market, but strategy, consistency, and patience. Building wealth doesn't have to mean high stakes or sleepless nights. Many of the wealthiest investors didn't get there by taking extreme risks, they succeeded by adopting methods that protect capital while steadily growing it. These strategies minimize risk and maximize long-term returns, and today, I'll share them. First up is investing in index funds. Instead of picking volatile individual stocks, index funds offer broad market exposure by tracking major stock indexes like the S&P 500. This lowers risk by spreading your investments across companies and provides solid returns without expert stock picking. In fact, index funds outperform actively managed funds over time. Next, there's dollar cost averaging DCA. This strategy involves investing a fixed amount at regular intervals, regardless of market conditions. For example, you might invest $200 every month into an index fund. This reduces the risk of buying at a high point during market volatility. By spreading out purchases, you buy more when prices are low and fewer when prices are high. Another key strategy is diversification. Don't put all your eggs in one basket. Spread investments across stocks, bonds, real estate, and alternative assets like commodities or cryptocurrencies. This lowers the risk of one asset class impacting your portfolio. When the stock market dips, bonds or real estate may perform better, balancing out overall risk. Next is the long-term mindset. Successful investors don't focus on quick profits, they think in decades, not days. The market will fluctuate, and it's easy to panic during a downturn. But if you stick with your plan, even during rough patches, you'll be in a better position to capitalize on long-term growth. This mindset helps you avoid costly mistakes like panic selling. Another key element is rebalancing your portfolio. Over time, some investments will perform better than others, shifting your asset allocation. Rebalancing means adjusting your portfolio to maintain the desired mix, ensuring you stay aligned with your financial goals. Whether it's selling some stocks to buy bonds or shifting to international markets, rebalancing helps you stay on track and reduces risk. Finally, tax efficiency matters. The less tax you pay, the more you keep, improving returns over time. Accounts like Roth IRAs or 401ks offer tax advantages that can help your wealth grow faster. Understanding tax implications like capital gains tax helps you make smarter investment decisions. By using these strategies, you can build wealth with minimal risk. It's not about quick wins, it's about making smart decisions that pay off over time. The path to financial success is a marathon, not a sprint. By staying disciplined, patient, and focused on the long term, you can secure your financial future and achieve lasting wealth.